Ladies and gentlemen, welcome back to the channel as markets continue to consolidate just below your previous all-time highs. There is hope, and I am optimistic that stocks will continue higher in the months to come. I do have all of your breaking news you need to know today. New tariff letters that are being sent out. Trump again calling on Jerome Powell to cut rates immediately. And I do have a clip as well from CNBC, some economic data as well today. We will take a look at the Atlanta Fed GDP Now tracker because we did get a new update today for Q2 GDP. Hit that like button and subscribe to the channel if you have not done so already. Ladies and gentlemen, if you have not checked out that link down below in the description of this video and you are looking for the next 10 bagger, 20 bagger, 30 bagger, or perhaps even a 50 bagger or two, that's what we are doing over there. We are going out finding the stocks that Wall Street does not know about yet, that they have not caught on to, that are doing big things in AI and biopharma. I think that's where the opportunity is right now. And we are finding them. Companies where you would be shocked at the levels in which they are trading at relative to other companies you may know about, relative to SoundHound or BBAI, Big Bear AI, or some of the other AI stocks. Like, you have these small caps that are fantastic companies, partnerships with Google and Microsoft and Tether, and profitable by the end of this year, that are trading at a third of the valuation of some of these other stocks just because they don't have a large retail investor base. I think that's going to change, and I think we are heading into a super cycle of AI. And I think the biggest return potential is in some of the stocks that we are investing in. So come check that out. If you have not done so already, you can come chat with us, come get involved with the community 24/7, 7 days a week. Link down below in the description of this video. Obviously, not financial advice, not a financial advisor. Verify all DD that is posted in the group always. But with that said, let's go ahead and get started. Donald Trump says the U.S. will impose a 30% tariff on Libya starting August 1st. Trump says that Moldova goods will get a 25% tariff. Trump announced a 30% tariff on Iraq. Trump announced a 30% tariff on goods from Algeria and announced a 25% tariff on Brunei starting August 1st. Honestly, I didn't even know that was a country. And he announces a 25% tariff on the Philippines starting August 1st. Now, in the news today, Mexico's President Sheinbaum says Mexican copper exports benefit U.S. industry and the U.S. economy. Mexico's President Sheinbaum says Mexican officials will talk about the border and trade in D.C. on Friday. Mexican president says, quote, "Let's wait," when asked about Trump's tariffs on copper import. Trump says any country aligning themselves with the anti-American policies of BRICS will be charged an additional 10% tariff. There will be no exemptions to this policy. Trump says our Fed rate is at least 3 points too high. And he again calls on Jerome Powell to lower the rate. U.S. wholesale inventories month over month came in at negative 0.3%. The forecast was positive 0.2%, but this is not really a huge catalyst. It does feed into GDP expectations a little bit. We can see the Atlanta Fed GDP Now tracker is currently sitting at 2.6% with the latest estimate that came out today via those wholesale inventory numbers. Now, what is also important to remember is the contribution of inventory investment to annualized second quarter real GDP growth decreased from negative 2.13 percentage points to negative 2.15 percentage points. So there's some subcomponents of the GDP data that don't look as great. And here today, NVIDIA becomes the first company to reach a $4 trillion market cap. And Trump on Truth Social says anybody but too late. He's just calling him too late. That's his new name for obviously Jerome Powell. Jerome Powell at this point honestly should just resign. He He's clearly incompetent or compromised. EU's trade commissioner says, I hope to reach satisfactory result in the coming days, obviously on trade with the US. And the EU trade commissioner says trade talks continue remotely every day with the US. Trump trade advisor Navarro says Apple thinks it's too big to tariff, which sounds like a threat to Apple. EU Trade Commissioner tells EU Parliament our priority is a negotiated solution with the US. Navarro says that markets understand that trade letters are negotiations. This is what I've said for the past couple of days since we heard about these trade letters. It's not the end all be all. It is the worst case scenario for, let's say, South Korea or Japan that have received these letters. It is that 25% rate. If Japan and South Korea want to negotiate, then the rates are going to go lower. It's kind of like a rip the Band-Aid moment off where, hey, this is the worst possible scenario and it gets better from there. So it's kind of a good way or good thing for the markets, right? It's hey, this is the worst case scenario. Odds are it gets better from here, but if it doesn't, hey, there you have it. There's the rate. EU's commission says we aim to reach a trade deal with the US before August 1st, potentially even in the coming days. And German Chancellor says, I am optimistic we can agree with a deal with the US by the end of this month. Now take a listen to this clip on CNBC. It's only about 4 minutes long. It says, this market is characterized by momentum and FOMO, says Interactive Brokers Steven Sosnick.
Back hitting a record high in NVIDIA at $4 trillion. Let's bring in Steve Sosnick, Interactive Brokers Chief Strategist. Steve, what do you make of this, especially against the backdrop of some of the recent moves and momentum that we've seen?
Well, Leslie, to me, I could characterize this market as a combination of MOMO and FOMO. It's momentum. There's also a fear of missing out. I think the NVIDIA number is a nice milestone. Once it gets sort of in the public consciousness, these numbers become magnets. So it was sort of inevitable. And I think the character of today's rally, though, is very much of the don't short adult tape variety, because this is a week where we don't have a ton of catalysts. The only catalysts are the ones coming from the tariff talks. And the market has been basically conditioned to look through them or ignore them or look past them because, they're just, it's behooved you to do so, and traders tend to keep doing what's working for them.
Yeah, you mentioned in your note that it's the half-life of tariff reactions has been steadily shrinking. Do you think that's because of the specific announcements coming through? Do you think it's what we're referring to in terms of the psychology and the fact that, now that we look back several months later, we can say, oh, well, if you just didn't sell in April, you would have, largely been okay?
I think it's more the latter. I think again, the lesson that traders are taking away here, rightly or wrongly, is, ignore these because something will come out of them that'll be better. They're never going to be as bad as we want. The July 9th became August 1st, and there were the nasty letters that went out, but there's room for wiggle room. There's room for negotiation in there. So the market is always taking that point of view. At some point, there is a reckoning to be done with here, but the market just chooses not to. And so if you've gotten conditioned to see every dip as a buying opportunity, then at some point you don't even really want to react to sell, because why sell? Because it's going to go up more. This is the I'm not saying this is like the strategy that one should be doing all the time, but this is the psychology that I think is going through a lot of active traders' heads.
What do you think breaks then that kind of reaction function? Is it a rate change? Is it an earnings trajectory change? Both?
I think an earnings trajectory change is very possible. Talk about like no catalyst today. Well, we get a whole lot of them starting next week. And what's very different about this earnings season to me is I can't remember last quarter, where basically companies could say, guidance? I don't know, guidance? What am I going to do with guidance? And the market was like, okay, yeah, we're fine with that. Think of how insane that is, considering what markets have been doing. And it made sense at the time, but I don't know that these companies are going to get a pass this time around.
In terms of pulling guidance or lower, whatever.
They have to deliver. They have to say something. And I do think in some cases, with the lack of clarity, they're not going to be able to just fudge it for a while. They'll probably give if-then statements, like if the tariffs are this, our guidance is this. If not, then something else. But they're going to have to say something, and that's going to be an interesting measure as we go forward.
Yeah, I guess those companies that do have a direct impact or some kind of sensitivity to the consumer reaction to tariffs have to say something. I wonder if the market's just trying to resize the tariff risk a little bit and say, look, the S&P 500, it's 40%, these 8 companies or whatever, 10 companies that don't really matter when it comes to the tariff debate.
That's a large part of it. Is basically we've been increasingly top heavy in our performance. We came on the air talking about Nvidia.
Sure.
It's very much that AI driven trade coming in, and I think to some extent that that is what's moving things higher. But it is important to bear in mind for those who might actually be inclined to hedge that these momentum stocks that are leading on the way up also led on the way down.
Yeah.
And so for those who are inclined to hedge, if you want to hedge a big beta trade, you're probably better off doing it with NDX than you are with SPX, because these stocks, as big as they are in SPX, they're even bigger in NDX, and so you get the extra beta using that.
Yeah, momentum works in both directions.
Exactly.
Good reminder.
Now, here is the good news. The good news is there's only really 4 countries that matter significantly to U.S. trade, to earnings, to the state of the market. Number 1 is China. We have a preliminary agreement with China. Trump's comments recently towards China have sounded great. Okay, that's good. Number 2 is Europe as a collective. Europe has been a little rocky, but Trump has said they're not going to get letters, at least not yet. And there's some comments today that we will get into that sounds like they want a trade deal by August 1st. Okay, so things are moving in the right direction as far as Europe is concerned. Canada, most goods are covered by the USMCA Act anyways, so I don't think we necessarily need a trade deal. Same is true for Mexico, but it sounds like things are, again, going in the right direction for those countries as well. South Korea, Japan, India, while they're not that important, they're kind of important. It's just not a huge deal what happens with these other smaller countries from a market's perspective. And here's the deal with trade letters. We'll get into some of the quotes here in just a moment, but the administration is using this as a negotiations tactic, okay? It's like they're sending out these trade letters. That's the worst case scenario. That's the rip the Band-Aid off moment, right? And then things get better from there. So it's kind of front loading a lot of quote unquote bad news by sending out the tariff rate and then negotiating it down, negotiating trade deals. So I think this is actually a great approach to from the market's perspective, right? Give us the bad news first, let us digest that, give us good news to follow that. We'll get over that bad news when we get good news pretty quickly. Now, also in the news today, online shopping sees the biggest slowdown in over a decade as tariffs disrupt e-commerce, as per CNBC today. Now, again, I think we've been due for a consolidation for a while. I think that is the phase we are currently in the markets. A consolidation, up, down 2%. That's I'm kind of expecting a little bit of chop here. Once we get into earnings season and earnings start to come in really good and Wall Street realizes, hey, tariffs are not going to be nearly as disruptive as we thought they were going to be, I think that's where people start to get a lot more optimistic about stocks. And we're all looking towards to 2026, where we're going to get a lot more rate cuts. The big, beautiful bill, no tax on tips, no tax on overtime, is also looking pretty good as far as boosting the economy. You also are going to be running a massive deficit for the next 2 years or so. And deficits tend to be good for stocks. So when you mix all of this together with a focus on AI, earnings outperforming, trade deals getting done and getting past that, geopolitical tensions dying down, there's not a whole lot to be bearish on, okay? I think even from the interest rate perspective, that's kind of been restricting this economy for years, right? If you look at like European inflation models, we don't have inflation. It's non-existent. And these interest rates, it's a miracle we have not went into a recession. I think it just shows you how strong the economy is and how diverse the economy is. We should have been in a recession. I think the lower income earners would tell you, we've been in a recession for a long time. I think we can actually start to see over the next year or two, lower income consumers actually start to recover, start to get back on their footing again with lower interest rates. I think that's going to be fantastic. Let's imagine as well, lower interest rates can start to get homes moving again. We can start to see homes getting bought and sold. In that scenario, imagine how much equity is out there in homes. It's at record levels. Even if prices don't come down, but interest rates do, okay, you're going to see people take hundreds of thousands of dollars to their bank account as they sell their homes. And that's going to, pave the way for a lot more spending in this economy. So again, I think right now we're due for a little bit of a lull. I think it's a healthy thing to see the markets consolidate a bit, but I do think AI is going to be front and center. I think earnings are going to beat. I think margins are going to come in good. Trade deals are going to continue to, happen. We're going to get past all this. And really the last couple of months of this year, we're going to be paying attention to 2026 heavily and say, wow, 2026 looks really good for growth and for this economy. And clearly for AI, I think that's really the hot spot. I think that's where you want to be investing your money. I think right now is like the iPhone moment in 07, 08, where like if you could go back, boom, it's 07, 08 right now, you would say, wow, I want to buy as much Apple as I possibly can. Okay. And at a moment, you would switch to NVIDIA, obviously, with hindsight being 2020. We already know what's going to happen. But back then, it was the iPhone moment where there were doubters. You wanted to really lean into that. I think AI is another 08 iPhone moment or 06 iPhone moment where if you're investing age today, you do not want to miss out on AI. And I think, again, you can get good returns in some of the high-flying AI stocks today, but I think the biggest returns are going to come from the AI stocks that come out of nowhere that show, hey, wow, they're doing something with AI. And that is what we are doing. That's what we're looking to find, those small mid-cap AI winners that are underappreciated and underlooked. You're never going to find something that Wall Street does not already know about in NVIDIA. You're just not going to do it. NVIDIA is not going to go up 10x, but a lot of other AI stocks in the small cap field could, and that is what we are investing in. Check that link out down below in the description of this video if you have not done so already. I gotta tend to him. He is going crazy. Hit that like button and subscribe to the channel if you haven't done so already. You guys have a great day, and I will see you in the next one.